Hello everyone, hope you're doing well. Welcome to another episode of Monday Markets brought to you by FTX. Links are available in the description below for all your useful things. Mobile trading app and portfolio tracking with no leverage, so no chance of liquidation. If you are going to venture into the more gambling side of things with futures products or stuff with leverage, make sure you're not from a restricted jurisdiction, and then also be sure to check out the leverage trading guide, which is free in the description below. And if you do sign up or want to support the show, use the links there. That helps us and suggests to FTX that we're not totally useless as partners. So thank you for all that, and again, the support on the videos with the likes and subscriptions and the comments have been excellent. Enjoy engaging with you, and please keep it going. So let's start with BTC. Not much has changed. We're all kind of begging for volatility at this point, and the market's been reluctant to provide it. As far as higher time frame stuff goes, it shouldn't be terribly surprising what I'm going to say. The market is still below 20k, 19.9, whatever you want to call it, this previous cycle high. As long as that's the case, it's difficult to be too excited. And I think once we get above that, we can start making a case for a move back within the range, as we'll discuss in a second. But at face value, kind of if you want one idea or one level that matters, I'd rather be bullish on the market above 20k rather than below 20k. And that's sort of it. If we want to get a bit more granular with it, we can sort of look at the last few months of price action, specifically taking the small bounce that we did have from 20 to 25 or whatever, and depict it as a range with the lowest close on the lowest monthly close, highest close on the highest monthly close, and the mid-range ends up at around 21.6 or thereabouts. You can see how that falls on the weekly and also on the daily, and the general premise, just kind of at face value or from observation, is that the market is spending a lot of time testing the underside of the range, which is currently acting as resistance. So this is a good way to sort of visualize the premise that I want 20k to act as support before we can kind of anticipate a move up or at least trade back within the range. And the market is reluctant to provide that at the moment. But what it would look like, again, is ideally some sort of weekly close back above this 19.9 20k boundary. That would suggest that the range for low has been reclaimed, and that this price action is a very long and painful deviation. And then one level at a time, we could look towards the range midpoint as target 1, 21.6, and then 23k as the range high target 2. Again, unfortunately, that trade isn't currently available, but it's kind of the first area where bullishness would be warranted, or at least technically supported from a higher time frame perspective. And again, if we look at this area on the daily, we have this kind of clustery, confluent range high just around the 20.2, 20.3 angle. So if we see a push above there, that would suggest a short-term break in market structure, and then any pullbacks into this sort of prior range low or area of prior highs would be for buying, ideally for a move into the midpoint, perhaps the range high. At face value, that's not available yet. The market is below it and it's acting as resistance. But if you're looking for what would finally change the, cause a shift in market structure or suggest different flows, it would be a weekly, ideally, move above 20k or cemented by some sort of daily higher high through 20.2, 20.3, and then we can talk about higher lows, then we can talk about pullbacks, then we can talk about a move from range low into range midpoint, but we're sort of waiting for that to set up, and it's not currently available. In terms of what is currently available, if we sort of delete this higher time frame range, important as it is, I sound like a broken record at this point, but the market is still bouncing off of this 19k daily range low. I've lost track of how many times it's acted as support. It's a lot. It's been decent for intraday bounces. We had this quite long wick through it on CPI day, which closed above, so I still haven't seen any evidence of a type of failed breakdown or something more attractive that would sort of reset the count for this level. So as I said, if you want to be constructive from this level, given how many times it's been tested, I certainly can't keep rebuying it. The two setups would be some sort of higher high shift in market structure, then we can look for a higher low continuation into the midpoint, into the range high. That would be acceptable. Or on the other side of that, some sort of very clear breakdown that wipes out all of these lows, right? Or ideally even the June low, if we're talking for something that's going to be visible on the higher time frame, and then ends up acting as a failed breakdown, right? So something that really makes an effort to break the range, that gets absorbed and then trades back within the range, that would also sort of reset the count for the level and suggest bullishness that the market wasn't accepted below the range low, and then you typically swing it to the other side. So neither here nor there at the moment. It didn't go low enough or close bearishly enough to suggest a failed breakdown, and it hasn't broken resistance yet to suggest a shift in bullish market structure. We're still in kind of volatility, Armageddon, Purgatory, Apocalypse. Purgatory is probably the best word. Volatility, Purgatory, and we haven't broken out of that yet. So much to be desired from Bitcoin. And again, the rotation's just getting a bit smaller, tighter, and to be honest with you, this entire block of price action has been quite unappealing. So that's all for BTC USD. As I said, hopefully those triggers are fairly straightforward, either daily market structure or failed breakdown, and we're neither here nor there for the time being. Regardless of whether you want to use the daily time frame for that idea or the weekly, the levels are all the same given how narrow the range has been. As far as ETH USD goes, same premise, to be completely honest with you. The idea is that we have this prior cycle's high at 1420 or thereabouts, and that continues. The market continues to trade below it and treat it as resistance. You can see on the weekly time frame, no weekly close above that structure as of yet, and even the weekly tests haven't been pushing all the way there. As far as the daily time frame goes, the market is still playing ping pong between this 1400 previous cycle high and this pre-merge breakout 1200 range low. That's been our range for a while. The market's still respecting it, and that's kind of all there is to say there. If you look at the levels that matter, again, it's this prior all-time high 1400, range low or range high retest at 1200, and the market is right between those levels. So it's at the midpoint between the two levels that matter, and it's very unlikely that this is anything other than pure diddling in the middle, which is not something I want to do. Unsurprisingly, if the market kind of forms a failed breakdown at 1200, that would look good. If it forms a breakout above 1400 that's accepted, that would look good. But here, I'm not terribly interested in it. As far as if the market does puke and trade lower, let's say you get a weekly, or sorry, a high time frame close, like even a daily in this case, below 1200, that would suggest a move back within the range, right? The range high failed to act as support, and then we sort of go back to what we've had for a while. 1200 range high, 1900-ish or 1k range low, and so closing back within 1200 would suggest a move towards 1.1k range midpoint, and then 1k round number 990 range low. So again, we sort of need these boundaries to do something in order to kind of generate a trade idea, because the market at the moment is balanced, right? So the market is balanced, that's fair, it's at fair value, volatility is compressing, that's not the best kind of trading environment. You want to see either a successful break from balance, in which case momentum continuation in the direction of the break, be that to the upside or to the downside to the upside, or you want to see an attempt to break from balance, which then fails, and then we treat it as our standard type of range trade, right? At the moment, neither of those setups is available. The market hasn't really poked. Well, it's poked at those kind of value areas or attempted to break from balance, but not in any meaningful way. It's kind of just been support, supporting, resistance, resisting, and no type of trap setups or anything meaningful, at least for me, happening at the levels that matter. So again, I'm waiting for the market to really try something spicy at either above 1400 and 1200, and then depending on how that develops, I will develop a view. But right now, it's right at the midpoint between the two levels that actually matter, so I'm not going to be terribly excited at this juncture. And again, volatility purgatory still continues. Not much home to write about here. Not much to write about home. Whatever the idiom is. My English is bad, leave me alone. Not much to write home about. There we go. English is very difficult. So as far as the indices go, and again, altcoins are uninteresting. I'm not going to pretend I care or I pay attention. There's really nothing going on. The focus is on BTC, ETH, and the indices, and that's sort of the name of the game. Even on weekends where it should be quote-unquote crypto flows, nothing interesting is going on. And, sure, there are some moves in DeFi, etc. If you want me to cover some of them, we can talk about it, but I want to talk about the stuff that I'm paying attention to and that I know and that will generate trade ideas for me. And at the moment, it's just not an altcoin world. So I will tread lightly where my interest isn't particularly high. As far as the indices go, they had a decent kind of recovery after a high inflation print, which isn't terrible. But similar to sort of ETH, I guess, but also BTC to some extent, the market is playing ping pong, and the current levels, which are providing support and resistance. As you'll recall, it's this monthly cluster on the S&P between 3710 and 3760, and then it bounced at the top of this cluster between 3500 and the lower boundary at 3300-ish. And that's sort of where the market is right now, between support and resistance. You can see it on the weekly, you can see it on the daily, and that's sort of all she wrote. Kind of similar to ETH, if you're bullish, you want to see some sort of reclaim or a failed breakdown. In this case, a failed breakdown would mean closing and trading and whatever being accepted back above 3700, 3600. That would be the first time that a support that broke failed to act as resistance. That would be a meaningful shift in behavior, and then we can look for a move towards the midpoint of the range, or 4k round number would probably be my first target area, or whatever that may be. Again, it's really not the levels as much as the shift in behavior that's important to me. So far, all these breakdowns have been breakdown, retest, breakdown, retest, breakdown, retest. So I want to see that fail in order to kind of allow me to be bullish. At the moment, it hasn't done that. The first test of support supported, the retest of resistance is resisting, and that's sort of where the market is right now. So again, the earliest bullish signal, if you weren't doing it at the lows, would be acceptance above 3,700-ish. In the absence of that, best case, we continue to chop here before the market makes its decision. Worst case, kind of, again, I think ETH is like almost a perfect mirror to this. If the market fails and trades back within this range high, so below 3,500, generally you target the midpoint of 3,400 and the range low of 3,300. So nothing really particularly interesting on S&P as far as high time frame closes go. Resistance resisting, support supported, and we're sort of playing ping pong between these levels. I would look for failure, or at least an attempt to break which fails, in order to derive some sort of directional bias. But it seems like the easier quote-unquote move is done, that you've got support at support, and now the market's kind of reached resistance, and it's worth kind of waiting to see what that evolves into. As far as the Nasdaq goes, it kind of looks worse than the S&P, but it's still trading around the monthly cluster that we've been following for some time. That is to say, if we take, as you'll recall, this highest close here at 12.1, lowest close at 11.1, you get a midpoint of 11.6 or thereabouts. If we're looking at it on a monthly time frame, you had a break from the range, retested the midpoint, and now it's retesting the underside once again. So at the moment, you're getting just what looks like a bearish retest or market finding resistance at the bottom of the previous range. If we look at that on the weekly, again, sort of right on this underside retest here. So at least from a relative risk to reward point of view, I don't see the case for chasing this into resistance. Now, on an intra-week basis, if this sets up during the week that you really get strength above this 11.1k handle, I would just treat it like a range. This ends up being the deviation. You get acceptance above a few daily closes. Maybe if the weekly close especially is constructive, you can swing it towards the range midpoint with this range high and the range high at 12.1. But that's all speculative. At the moment, it's just kind of a backside retest of resistance. So it's still very tricky. That's kind of all I've got. I know it's short, but the market really hasn't moved much. For BTC, as I said, you want to see either a shift in market structure above 20k, and then we can look for sort of higher lows or continuation setups. Either that, or finally break this 19k level in a way that perhaps fails or reclaims, and then we can talk about it. But this kind of volatility purgatory far less attractive. For ETH, it's still playing ping pong between 1,400 and 1,200. I need the market to make an effort to break one of those levels, or indeed break one of them, and then I can develop a view based on how this consolidation resolved. But at the moment, it's just between the two levels that actually matter, so nothing much to be said there. And for the S&P, a similar kind of sandwich setup. You've got strong resistance at 37 to 37.60 and support at 35 all the way down to, well, that'll be the next level, but kind of in the short term, support between 35 and 37, again range bound. And similar for Nasdaq, although slightly less obvious where support is, you currently have a backside retest of 11.1. So none of my kind of bullish wish list or checklist has been achieved yet, and the bare minimum for that would be failed breakdown setups across indices and or crypto, or clear range reclaims and or higher highs among indices and crypto. That just hasn't happened yet. We're still in vol purgatory, still playing ping pong with levels. The market's still indecisive. You can even see, Nasdaq up 3.6%, S&P up 2.8%. On our side, we've got BTC up 1.1% and ETH not even up 1%. So even these large, risk indices are outperforming us on the bounce, and that sort of speaks to the contained, if you want to put it charitably, demand for crypto at the moment. So nothing has me terribly excited. Hopefully the setups I'm looking for are clear, and if or once they trigger, we can certainly talk about them. But a lot of it is just ping pong at the moment, and the latter half of moves from support to resistance, and nothing quite piquing my interest or appetite quite yet. I hope that was helpful. I wish the updates were more exciting, but in a market that's not exciting, I'll always just prioritize honesty, and that's sort of what I'm seeing at the moment. I hope you found this helpful nonetheless. If you did, leave a like on the video. Just that thumbs up button really helps us. Leave a comment if you observed something, or perhaps I'm missing something, you think I'm an idiot. You'd be well supported in that opinion. And also, as always, thank you to FTX for supporting the show. Also, they support tomorrow's newsletter, trletter.com, for more levels, more commentary, and maybe some educational stuff. As always, links available in the description below if you want to sign up and make us seem somewhat useful, we'd appreciate it. Or at the very least, for your informational purposes, do read our free leverage trading guide to learn something, or send it to a friend who keeps getting liquidated. That's all from me. Hope you have an excellent week. See you in the newsletter and Casual Friday later on this week. I do wish we get out of this vol purgatory soon, so that we have some exciting levels and developments to talk about. That's all from me. Take care. Thank you for watching, and goodbye.